Oil crashes after Trump's Iran ceasefire announcement. Global markets explode higher. What just happened in global markets shocked investors around the world. Oil prices didn't just fall, they collapsed. Stocks surged. Bond markets rallied, and all of it happened after one major announcement from President Donald Trump: a 2-week ceasefire with Iran. Now, this is not just another geopolitical headline, because when conflict in the Middle East suddenly cools down, the entire global economy feels it. And today, investors are asking one critical question: is this the start of real peace? Or just a temporary market bounce before more chaos? Because while Wall Street is celebrating right now, many analysts say the biggest risks may not be over. So in today's video, we're breaking down why oil crashed so hard, why stocks exploded higher, what this means for inflation and gas prices, and why the next 2 weeks could determine everything. Let's get into it. What happened? Global markets surged after President Donald Trump announced a temporary 2-week ceasefire agreement involving Iran, easing fears of a prolonged military conflict in the Middle East. This announcement immediately changed investor sentiment worldwide. Why? Because for weeks, traders feared the conflict would escalate further and threaten one of the most important oil routes on Earth, the Strait of Hormuz. Nearly 20% of global oil and gas shipments pass through this narrow waterway. When markets believed that route could remain disrupted, oil prices surged, energy panic spread, and inflation fears exploded. But now, with hopes of oil flowing again through the Strait of Hormuz, markets flipped overnight. Oil prices collapse. The biggest move came in oil. U.S. crude dropped roughly 16.5%, falling toward $94 per barrel after the ceasefire announcement. That is one of the sharpest single-day oil declines in years. Why such a huge drop? Because oil traders price in risk premiums during wars. When conflict threatens supply, traders panic buy, oil spikes, energy stocks rally, inflation fears rise. But when peace appears possible, that premium disappears fast. And that's exactly what happened. The market is now betting that oil tankers will move again, supply disruptions will ease, and global energy markets may stabilize. At least for now. Stocks surged worldwide. As oil crashed, stocks surged globally. Markets love lower oil prices because cheaper energy helps reduce inflation pressure, lower business costs, improve consumer spending, increase corporate profits. That's why major indexes jumped immediately after the news. Investors rushed back into risk assets. Tech stocks rallied. Industrial stocks climbed. Travel and airline stocks moved higher. And global markets entered full risk-on mode. Why? Because if energy prices fall, central banks may feel less pressure to keep interest rates high. And Wall Street loves that possibility. Why this matters for gas prices? Now, here's what everyday Americans want to know. Will gas prices fall too? Possibly, but not immediately. Even though crude oil dropped sharply, gasoline prices usually lag behind oil moves. Why? Because refineries need time to process cheaper crude. Existing fuel inventories were bought at higher prices. Supply chains take time to adjust. So while lower oil is bullish for consumers, you may not see relief at the pump overnight. Still, if the ceasefire holds, gas prices could trend lower in coming weeks. The big risk nobody is talking about. Here's the problem. This is only a 2-week ceasefire, not a permanent peace deal, not a final agreement, just a temporary pause. That means markets are celebrating, but cautiously, because if tensions flare up again, oil could spike right back up, stocks could reverse sharply, volatility could return instantly. In fact, many analysts say this rally is based more on hope than certainty, and hope in markets can disappear fast. What investors should watch next? Over the next 2 weeks, investors need to monitor 3 key things. 1. Strait of Hormuz traffic. If oil tankers resume normal movement, markets gain confidence. 2. U.S.-Iran negotiations. Any sign talks are collapsing could trigger panic. 3. Energy infrastructure recovery. Even with peace, damaged infrastructure may keep supply tight. So while oil crashed today, the long-term outlook remains uncertain. Bigger economic impact. This ceasefire could affect much more than oil. If lower energy prices continue, inflation may cool. Cheaper oil reduces pressure across the economy. Central banks could ease pressure. Lower inflation means fewer reasons for aggressive rate hikes. Consumer spending could improve. Lower fuel prices free up household budgets. But again, all of this depends on the ceasefire holding, because if conflict returns, everything reverses. So here's the bottom line. President Trump's too weak. Iran's ceasefire announcement triggered a massive relief rally across global markets. Oil plunged more than 16%. Stocks surged worldwide. Inflation fears eased, and investors rushed back into risk assets. But this story is far from over, because this isn't permanent peace. It's a temporary pause, and in markets, temporary pauses can become lasting recoveries or violent reversals. The next 2 weeks may determine which one this becomes. If you want real analysis on oil, markets, global economics, and breaking financial news, make sure to like, subscribe, and turn on notifications for more updates. This is Global Currency World, and I'll see you in the next one.